Welcome back, everyone. Our next company is E3 Lithium. It's an emerging lithium company headquartered in Calgary, Alberta, Canada, with a market capitalization of approximately $150 million and trades under the ticker symbol ETL on the TSXV Venture Exchange, EEMMF on the OTC, and OW3 on the FSE. E3 possesses world-class assets in the Bashaw District area in Alberta. And yesterday, they announced a material increase to its resource base, upgrading the Bashaw District's mineral resource to 16 million tons, measured and indicated. Prior to this, Canada held 3.2 million tons M&I in hard rock projects. This resource upgrade is monumental, placing E3 firmly on the map on a global scale for high confidence resources and makes E3's M&I resource Canada's largest and globally significant. So last year, they announced a strategic agreement with Imperial Oil, which 70% is owned by ExxonMobil, who is now a 5% shareholder of E3, representing the first investment in lithium from a global energy industry leader. Additionally, E3 has received over $32 million in federal and provincial funding, supporting a breadth of activities as they work towards developing its first commercial facility. They have completed their preliminary economic assessment for their project and recently announced major milestones that we believe will be major catalysts for E3 this year. Please welcome its CEO, Chris Doornbos. Welcome, Chris.
Yeah, thank you very much, and thanks for having me.
Wonderful. Take it away. Call me back when you're ready for questions.
Will do. Thanks, Anna. So E3 was founded in 2017. We are listed on the Toronto Stock Exchange. And I'll take you through a bit of the story, and I appreciate the intro because some of the big stuff that's coming out of E3 right now over the past little while, the big announcement yesterday was our M&I. So here's some forward-looking statements. They're here. They're on the website as well, so feel free to have a look as you need to. E3 is a global leader in responsibly sourced lithium. And I'm going to take you through those two statements because they're both pretty bold. The global leader and the responsibly sourced. We're looking to fuel this global transition to this electrical revolution that's happening globally right now. So looking at E3 as a whole, so we sort of sit on two major pillars. We've got a proprietary technology in the direct extraction space. This is something we've been developing since 2017. We're not the only ones developing a DLE technology, but what we believe from the perspective of the larger market is that while we are developing our own and while a lot of other people are as well, this is going to be something that is going to upsurp the lithium market in the next 3 to 4 years, as you see projects like ours come on stream. And that is backed by the fact that the other big pillar we sit on is that the size of this resource and the size of the opportunity that E3 has, which is 16 million tons of measured indicated. And as Anna mentioned, when you compare that to Canada, prior to this announcement, Canada had 3.2 million. So this is 5 times larger than the entire rest of Canadian resources. So the significance of what we have here in the Western Canadian basin and for lithium resources is extremely significant. E3 is the leader in developing these. We've been around. We've got the technology developed. We are working through our pre-feasibility study today, and I'll take you through some of our milestones as well. A couple other big pieces that E3 stands on that I think really separate us. We're really well funded between our government grants. We've got $27 million from the federal government, another $3 million just a couple weeks ago from Natural Resources Canada, and as well as we have about 15 to 16 million cash in the bank right now. It makes our effective bank balance somewhere around $25 million. We also are going to be one of those companies that produces, and one of the few in the world that will produce a battery grade product here in Alberta at the back of our facility. The majority of projects today and the majority of projects you're going to see come on stream in the next little while are making precursor products. So they don't take the revenue home. We will take it all home because we'll be able to produce the battery product. So we are a specialty chemical company. We'll be making a battery grade lithium hydroxide that we'll be able to sell directly to cathode active material manufacturers or CAM manufacturers. Being in Alberta has a significant advantage. I'm going to spend a bit of time on that later in the presentation about why Alberta is such a benefit and why developing a project here has such an enormous advantage for E3. We have a very experienced team. I'm going to talk about them next. And also our ESG focuses around the fact that we have a very small footprint and we use very little water, which from the perspective of how we will operate, we don't mine this, we pump it. And that is a huge fundamental difference from our ESG perspective. So we've got a very great team. We've got 30 people on staff to develop this project. We're firmly in development mode right now. Everybody at the company today hired out of Alberta's workforce. So the big advantage here is that we have everybody in Alberta that we need to develop this asset and to turn this into a lithium producer. And a little bit on their resource. So this is a pretty substantial announcement. We talked about this at the end of 2022. We set out our goals. We put a really good, detailed, fulsome announcement that you can find, a corporate update at the end of February. And that corporate update talked about our a deep dive into our goals and what we're going to accomplish this year. And the first goal on that list was this resource upgrade. This is pretty fundamental for us because to book reserves, you need this M&I. So we are working on our pre-feasibility study, as I mentioned. And to get that pre-feasibility study to convert to reserves, you need this upgrade completed. And why this is so important is first and foremost the size. 16 million tons makes it one of the largest in the world and definitely the largest in Canada and larger than any other combined resources. So that's significant. That means that as we develop the technology, as we get our first production in place, this only scales up. So we talk about 20,000 tons as our first project production amount, which we hope to have operating in 2026 or thereabouts. From there, we just continue to scale because of the size of this. The other part of this is that we converted 100% of the Bashaw inferred to measured and indicated. And why that's significant is that it demonstrates extremely high confidence in the reservoir, the resource that we have. It demonstrates that we have a high level of understanding, and that has been garnered by the oil and gas industry. So this is, sometimes we get called petrolithium or petrobrine. The reason for that is that this aquifer was discovered in 1947 by ExxonMobil, who are now a partner of E3's. They've come back into this aquifer to help us develop it for lithium. But previous, it was explored and developed for oil. The oil, even when they discovered the aquifer back in the 40s, it was only about 1% oil. And that's now all been produced off. And the rest of the fluid in this aquifer is the lithium-enriched brine. But the benefit there is that there's over 4,000 drill holes into this aquifer. I'm just checking the connection here.
You're good.
Okay, excellent. Sorry, I was just checking the connection. And so what that means for us is that the resource that we have developed here enables us to continually expand across a very large area with having the confidence to do that. The 4,000 drill holes means that we have data across the whole aquifer. 200 of them are still open. We can still go and test them. We drilled 2. We found one that was already open and available, and we tested that as well. So we've done detailed testing in the center of the aquifer just past year on 3 fit-for-purpose lithium wells. The other big piece of this is that E3 has a consistent mantra at the company of hitting our milestones. It's very important for a company like us to demonstrate that we can continually manage to hit our milestones. We set out some very clear goals for E3 for this year, culminating at the end of the year with the pre-feasibility study. And fundamentally, to get those done, you need to be able to manage your expectations and manage your workload. And we're very excited that this year is probably going to be the biggest year for E3 on record. It's going to set us apart from the peers in this area, but also set us out as a leader in the lithium development space in Canada and globally. So a couple points I've mentioned. We did an investment with Imperial Oil there. As Anna mentioned, they're a 5% shareholder. And they also provided a land package in our Clearwater area, which consolidated some land together. And also, as importantly, is that they're providing technical expertise. These people This company operated into the 90s in this area. They've got a lot of data that is not publicly available, and we've been able to work with them. We've been able to get access to some of that data, and they've been very helpful in helping us advance this, including the understanding of the reservoir, which has helped us get out this measured indicated that we did this week. This is for your reference, just talking about all of the accomplishments of E3 over the years. We've been very, very strong development profile as we've developed this company. The big catalyst for this year. So I just want to talk through this a little bit. We did an announcement, as I mentioned, at the end of February, talking about our corporate update and our goals for 2023. So the measured indicated upgrade was number one. We said we have it out Q1. That's now done. The NI 43-101 report will be out here shortly, so probably sometime in April. Our next big goal, and this is probably the biggest goal the company has yet to achieve as a company, is the field pilot. So testing the direct extraction in the field using real brine pumped from the aquifer in real time. That's the goal of this pilot. It is currently in design construction right now. The goal is to have this operating in Q3, and we're hoping earlier in Q3 than later. And we'll update the market as we go. There's a couple of key milestones here within that we talk about, which is we're looking to see that facility license come in, which should be coming shortly. And then as we complete the design, we'll be outlining to the market the key performance indicators or KPIs that they should see and expect to get as results as the pilot operates into the summer and fall. So we'll show you that beforehand, and then you'll be able to benchmark that against those as we go. And then there'll be announcements, obviously, as we go through that the process of turning that thing on and operating it. The other piece that we're working on is we're producing battery-grade lithium hydroxide this year. We have a bunch of the concentrate that's been produced already through the testing of getting ready to pilot. And then we will also have a bunch of concentrate that will be produced through the pilot. And between those two, we're going to be producing significant amounts of hydroxide, all of that for testing, so not to sell, but to develop customer relations with the cathode manufacturers, the battery companies, and the OEMs that we're talking to, so that they can have confidence that we can make the product. And then at the end of the year, all of this culminates in a pre-feasibility study, booking reserves, first of their kind in Canada, in North America, for a lithium project of this kind. So very, very big year for E3 this year. Where that leads us, though, is 2023 launches us into firmly design construction. So assuming that we're successful this year, and by the end of the year, the pre-feas is out and everything there looks good, we move into detailed design next year. We start the permitting process, we do feasibility, and then we look for project finance to have this starting construction, hopefully in 2025 and into 2026, and then operating hopefully by the end of 2026. The first plant, we're looking at about 20,000 tons per year. We're nailing that down right now through the process of doing the pre-feasibility study. So looking at the market, I'm not going to take too much time to go through this. What they're showing right now is that the biggest constraint for lithium on the market right now is in and around 2025 to 2028. That time frame is where you're going to see the biggest crunch. And then it tails off. It doesn't just stop there. But it gets less and less as more and more projects come on. And what that means is that the best prices you'll be able to get for your product are likely going to be in that time. It also means that there's this window that you're seeing big companies fund projects like ours. And you've seen that with GM and Ford and LG in the past 6 months. All of those companies have funded lithium projects directly to get their project up and running. The most recent one was GM giving Lithium Americas Corp, the Thacker Pass project, $650 million to get that project running. And those types of deals, they come at the late stage, right? We're not expecting any of that for E3 this year. They come at the late stage, but there's a window of time that I think those types of agreements are available. And E3's goal is to go out and capture that window so that when we get this into production in 2026, we have big supportive partners to help us get this running. And that's based on the fact that we have a very robust economics for this project. Completed at $14,000 per ton. Keep in mind that we're selling lithium right now at $50,000 to $60,000 per ton. At 14, this had a $1.1 billion NPV. So extremely strong economics, especially considering that the price environment is going to be much higher than $14,000 per ton. And when you look at the how we're going to do this all, it turns into three basic main pieces. You've got the production of brine, you've got the direct extraction, and then you've got the lithium production. We've been developing the ion exchange system, which is the DLE. We use an ion exchange process. Ion exchange allows you to flow high flow rates and enables you to extract very effectively and very efficiently. And that's why we like it. If you look around the market today at all the other DLE companies that are advancing towards commercial, all of them using some version of an ion exchange system. So one of the benefits that we have is that we're able to build on the backbone of already established industries. Even the DLE is a water treatment system used to extract metals from water. A water softener is the form of ion exchange. So all of those pieces are in places producing or treating for similar types of applications. So we're just bringing them together. We're doing this because our fundamental thesis is to deliver a low risk project to the market as quickly as we possibly can. And to do quick and low risk, you need commercially available solutions. And that's what we're chasing right now. And that's what the PFS will outline. Working in Alberta has another huge advantage. And that is simply that we are already doing this here in Alberta today. We are producing brine of a similar type in Alberta. We are bringing it. All right. I apologize for that. Looks like we're having a bit of internet issues here at the office this morning. So as I was going through, I'm not sure exactly where it cut me off, but basically to summarize the Alberta advantage, we operate a very similar way to what we're going to do for lithium in the oil and gas industry here in Alberta, which is our major industry. 90% of what we do in Alberta is related to it in some way, shape, or form, which means we have the skill set and the regulatory regime that we need to develop and build this project here in Alberta operating already. So fundamental to being able to build this. And the other piece of this is that social license. We have a very strong social license to how we operate in Alberta. This is the south central part of Alberta. This is Farmers Field, and it's similar to conventional oil and gas developments. And that leads us to ESG, obviously social being a big part of the ESG equation, environment probably being the first one that people talk about. We use less than 3% of land. Keep in mind, this is not mining. We are pumping brines from the subsurface. We are putting them to a facility and we're extracting something of value from that water. If you look at how oil and gas operates today, that's what they're doing. They're taking oil out of a brine effectively. But that surface footprint is very, very small. And it also has us reclaim immediately. As soon as the well is drilled, 95% of that disturbance is reclaimed immediately. And so we have less than a 3% footprint. We also don't interact with fresh water. And this is really important from an environmental perspective because we don't have an open pit mine and we don't dump the water onto a salar. We can have this in a closed loop system that's disconnected from the aquifer in its entirety. So this is something that customers for lithium are looking for, this high quality ESG, something very important to the industry. So just a high level summary on E3, and then I know we've run a bit over than we wanted to, but looks like we had some connection issues. Canada's largest M&I resource. We're looking at a first plant of 20,000 tons per year. We think we can scale up to about 150,000 tons per year, and that's probably going to have about a 50-year mine life. That's our total capacity. The PEA outlined a $1.1 billion project. We developed an ion exchange technology, but that ion exchange, the DLE systems that are out there in this world are becoming more and more ubiquitous. We're seeing more and more companies commercialize, and I think that's a very exciting point to what E3 is doing. There's a huge growing demand for lithium. It is the single element that is of the highest demand because it is used in every battery and every chemistry, and also our ESG standards. So, and I'll leave it there to jump into some questions.
Okay, great. Thank you so much, Chris. Okay, David M. says the manganese family of sorbents that you're pursuing have a tendency to dissolve with repeated extraction cycling. So what have you developed to remedy this potential issue?
Yeah, they're not wrong. There's a couple ways that you remedy that. I can't get into the specifics because they're all under our intellectual property banner. So it's something that we don't discuss the details of. But when you look at the trade-off from, and the reason that a lot of companies chase manganese based over some of the other, which is usually aluminate and titanate, is that it has extremely high efficiencies for lithium uptake. And so there's a trade-off with lifespan versus that efficiency and uptake because it costs you less money to extract the lithium on any given volume of brine by a significant margin. So that's why we've pursued it. You do have to work through that lifespan cycle And that's something that we have developed a system to do.
Ron Bowl says he has 3 questions. 1, what is the 24-hour daily capacity processing rate for brine at the proposed pilot plant?
I don't have a capacity for you at the moment. What we've done is the designer of the ion exchange process. So what's proprietary to E3 is our sorbent itself. And for the actual design of the system that we're going to be testing, the company that's designing it for us and will design for the commercial facility has given us a size of diameter of column and a system that they believe that if it operates as it will at the pilot, that they will give us a construction guarantee, a design guarantee for a commercial facility to operate the same way. So that's denoting the size. Is basically we're going to go as big as we need to get the commercial information, but as small as we can to be able to do lots of testing, because every cycle, every test takes time, and the bigger the system is, the more you have to cycle to get your answers. So there's a balance there between size and being, in terms of getting the data you need, but also getting the data fast enough. And so that's where the sweet spot is. And I just don't have a rate right now. We'll have one probably in the next month. We'll have the final rate determined.
Okay. Question 2, what is the final form of the lithium recovered at the plant?
At our pilot, we'll be making a lithium sulfate and a lithium chloride. That will then be shipped to the companies that do their lithium refining and turn into a lithium hydroxide.
Okay.
In a commercial facility, we will make lithium hydroxide at the commercial plant. So that the testing, the piloting that's going on for lithium hydroxide is being done at a separate facility simply because it's already built and operating, and we don't have to spend the capital to build it. We can just ship the concentrate down to them to do the testing. But that is leading to them designing the commercial facility, same version of, and then that commercial facility will then be built in Alberta in 2025-ish.
Okay. And what is the lithium recovery goal for the pilot plant in tons?
Again, I don't have a number. It's not big. It's not designed to make commercial quantities of lithium. It's designed to make for 2 goals. One is to demonstrate the commercial viability of the technology. So that's fundamental goal number 1. And as I mentioned, in terms of size and flow rate, there's a balance there between building it too big and getting answers that take too long versus too small and not getting the data you need. So that design is being nailed down right now in terms of the flow rate. And that's really what it comes down to, is a column dimension. How wide the columns are generally denotes your flow rate. And so you need to make them wide enough that you're getting good data, but not too wide that you have to flow lots of brine to get that data. In terms of lithium produced, the sort of focus on the minimum quantity of lithium is going to be at the demand of the customers that we're trying to complete offtake agreements with. So if they have a request for a certain amount, we will produce that amount for them. So what that really means is time. How long we run the pilot for produces more lithium. And so if the customers are demanding more product, we will run the pilot for longer to get that for them.
Thank you for that. We have a comment from Doug Chivers. After extracting the lithium, you seem to return the rest of the stream to where it came from. Surely this dilutes the source. So will not the extraction of lithium become less and less viable? Assuming that's the case, how long before it stops making economic sense to continue?
So this aquifer is huge. And when you look at all the DLE aquifers, inherent to DLE, 100% generally, or 99.99% of the brine you bring up, you do have to put back down. And that's the advantage there, is that you don't have to dispose the brine somewhere and have an environmental challenge because it goes back into the same aquifer. The trade-off to that is that you do have to manage your dilution, and that's what you're referring to, is the dilution. So as you develop this aquifer, you do expect that some of the lithium will get diluted over time. How we will be designing the well networks is that we'll basically stay away from that dilution front. So basically it forms like a front of dilution that moves across the aquifer. And so as we develop it, we continually step away from that dilution front. And basically what that means is that we create a sweep. So we sweep the aquifer for its lithium from one side to the other. We're basically we keep stepping away from the lithium void brine that's put back down over here as we move across the aquifer and we continually develop. And that's over long periods of time. We're talking 50 years. This aquifer is huge. It is 160 kilometers long. It is 40 kilometers wide. It is 200 meters thick. So we have lots of room to be able to manage that and continually develop this resource.
Jeff Marshall wants to know, how far out is E3 financially operational before needing a capital raise?
Right now, given all we have to do this year and the grant funding that we have in place, we're good well into 2024. So that's what we're going for right now.
JR asks, what are the chances that the ion exchange technology will succeed?
I mean, from our perspective at this point in time, the ion exchange technology works. It works 100% of the time. The challenge right now that all companies are facing is that scale up. E3 is looking at all avenues by which we can reduce that scale up risk. So we're looking at all options in front of us to understand what the most economic and beneficial path forward is to develop that piece of the process. And that has always been our sort of mindset, is that we need to ensure that because there's some new there's some unproven, and there's no way around that. How do we de-risk the rest of the process? And that's why we're using conventional companies, third parties that are designing similar systems. We've even looked around the landscape, and we keep a very close eye on other DLE technologies that are out there. Because at the end of the day, and I've said this lots before, we're technology agnostic if you really look at it. Because our value is not a technology company. Our value is the resource in the ground. So if we have a technology that enables us to get that out, we would look at it very seriously. So we do keep an eye on the other third-party DLE technologies. That's another way that we can de-risk this as well if there was a problem with ours. So we continue to develop as we go, and all of that will be outlined very clearly in the pre-feasibility study that's going to come out in this year, because we'll have nailed down a certain process flow sheet from start to finish, and everyone who's going to be participating in the pre-feas is going to be providing design guarantees on the performance of that. So they have to be comfortable with it, that it's going to perform. And there's always options. I mean, the pre-feas is really going to talk about the first 20,000 ton plant, but we're going to scale this to 150,000 tons. So there's always opportunities to change pieces of technology, or even change our technology, advance it, make it better. And we will continue to advance ours as we go. So we'll continue to modify, I'm sure we will, and improve it and increase efficiencies through time. And that's inherent to pretty much any technology development that's coming up.
Wonderful. Well, thank you. One last quick question. Dennis Murray, how much time will it take to process from the original brine to refined lithium?
Oh, it's probably in the order of an hour to an hour and a half from molecule out of the aquifer to a lithium hydroxide in a commercial sense, when that commercial plant is running. It really doesn't take long to move that lithium molecule from the aquifer into a hydroxide product.
Well, Chris, we have so many more questions for you, but we are out of time. If you would like to say some closing remarks to our audience.
Yeah, I mean, I think E3, our team, we've got 30 people on staff, as I mentioned. We're all very excited about this project and getting 2023 done. For us, 2023 represents a pretty big paradigm shift for the company, because we go from, a developer looking at how we're going to commercialize to we've nailed down how we're going to commercialize. Now we're going into design and construct mode. So we start staffing up, we start bringing in engineers to do that. We start doing the big design, and we start talking about construction. We start, looking at land, we start looking at permitting, all of that really detailed fundamental project development pieces start happening here in this fall. Again, our goal is first lithium by 2026, and we're adamant that we can do that. So, I think it's this year, when you look at growth and value of the company, it's going to be a big year for us, a big growth year for us, given all the things that were happening. And when you look at peer comps, when they have done what we've done, they've gone from our value, you mentioned 150 million, to around the $1 billion mark. And so we're looking at that similar peer comp as we go this year. So we're very excited about what E3 has in store.
Well, good. And congratulations on your recent accomplishments. And we hope that you join us again in the future with some updates.
Yes, thank you very much for having me.
Okay, everyone stay with us. We'll be right back with our next presenter.